Hey, what's up guys? This is Taylor, and I am bringing you the free video for Tuesday, the 20th of December. So in advance, Merry Christmas and Happy Holidays to all of you. We appreciate you being a subscriber to the channel. We appreciate you being a part of the Simpler Trading community, whether that be in the options room, the futures room, one of our masteries, or maybe even in the free room. We appreciate you guys and gals. So happy holidays, and we'll jump into the video here. So tonight I want to cover a potential short that I'm looking to take in Apple. But for starters, we'll take a look here at Mamacita market herself, and my point of view here, guys, not too much has changed, particularly on the weekly chart. So on the weekly chart, we continue to play out this pattern of lower highs and lower lows. Got that big push in August. You once again put in a lower high after getting stuffed at the weekly 50. We roll over, we put in a lower low, and sure enough, last few weeks here, bulls making a little bit of progress, structure starts to improve, lower time frames looking a little bit bullish, but all said and done, we rally back towards that weekly 50, we put in another lower high, and I do think from here there's a potential we come right back down towards 3,500, and maybe even put in a lower low, continuing that pattern of the weekly downtrend. So the problems on the weekly chart, they continue to be the same. And one other observation here. So I don't have the MACD indicator on my chart, but what I do have are these color-coded bars that coincide with the MACD settings. So on my charts here, if the bars are gray, MACD is bearish. If the bars are green, MACD is bullish. So you'll notice every one of these rallies here in this weekly downtrend, the bars never went green, meaning the MACD never crossed positive. So momentum has never actually confirmed what we've seen from price action. Back in March and April, price goes higher, momentum never confirms that move. So we continue to roll over. Big push in August, price goes higher, but we never got a green bar. MACD never crossed positively. Momentum never supported the idea of the market trading higher. And same thing this time around. Big push from 3,600 towards almost 4,100, but the bars remain green, meaning momentum not really supportive of this bad boy turning the corner and trending to the upside. So you got some problems on your weekly chart. Quick look over here at the daily chart. So on the daily chart, zoom in here a bit. Yesterday those bars went gray. They went from green to gray. So that tells me MACD just crossed negative. So negative momentum divergence inside a daily squeeze that starts to fire short as of yesterday. So you're in a weekly downtrend. You have a daily squeeze firing short, and on your lower time frames, like a 1 hour, a 30 minute, a 15, my big 3 indicator starts to print sell signals. So long story short, none of that is bullish. And I'm kind of looking at the market through the lens of, pretty much it's either a short squeeze or a die. This pattern of a downtrend on the weekly chart, still completely valid. So given the fact that they weren't able to, fix these problems on this most recent rally, would kind of suggest to me the pattern continues. You sprinkle in a daily squeeze firing short, you sprinkle in some lower time frame sell signals, and then you sprinkle in some spankings. Tesla here, down 8% today alone. Where I'm from, guys, we call that a good old-fashioned spanking. So this is, I'm trying to think of a word I can use here on YouTube and not get in trouble. We'll call it ugly. It is pretty damn ugly. So, we'll see what's up here after Christmas. We will see what's up heading into the new year. But from my perch over here in Massachusetts, looks like we have seen this movie before. So unless the bulls can drastically turn things around here, I do think eventually we come back down and put in a lower low. So as always, subject to change. There's an old saying, don't marry your ideas. I'm not going to marry the idea that we're going to roll over and take out the recent lows. But structure for structure, it certainly looks possible. Alright, so moving on here to the Big Apple. Now here's the whole thing. I don't want to short it right here. So Apple closes today around 132. In a perfect world, and it ain't always perfect, my friends, but in a perfect world, I would like to start scaling into a short, somewhere closer to 135, 140. But as far as why I think we got a good short lining up here, on top of all the Sorry guys, someone knocking on my door. I'll deal with that after. Along with the issues in the market, the structure on your weekly, your daily, and your lower time frames, all pretty problematic here for Apple in its own right. So on the weekly chart, we've got key support here at 130. And, frankly, guys, if we break 130, I don't see too much coming up to save Apple until we're potentially down here at the weekly 200, around 113, 115. So under 130, I think you got a big air pocket here. We have a squeeze. That's only 2 weeks into firing short. And the good rule of thumb on a squeeze, fires either long or short. Typically, we're going to look for about 6 to 10 bars of momentum. So being that we're only 2 weeks into this firing short, I do think we're a little bit early. We're certainly not late to the idea, especially considering the fact we haven't broken support yet. So you got a weekly squeeze at key support, not too much under that level of support. So if you break, you could get a pretty big flush. Over here on the daily chart, squeeze fire is short. Now again, the only problem here, we're a good 2 to 3 average true range moves under that daily 21 EMA. Meaning any given day now, Apple could rally to about 140. Doesn't change the structure. Doesn't make Apple look, suddenly all kinds of bullish. But of course, if you're shorting at 130, that $10 pop on the chin can be a little bit uncomfortable. So like I mentioned, ideally we try to short it on a bounce. But you take your weekly squeeze firing short, at very key support, your daily squeeze firing short, and then very much like the S&Ps on your lower time frames, your 1 hour, your 30, your 15, you get a bunch of sell signals printing on the big 3 indicator. So I feel like, as far as edge, there's some pretty good edge here looking for a short. Structurally, the squeeze is at key support. Again, if we break, you probably get a pretty big flush. So in terms of the structure and the signals, I think there's some edge there. But more importantly, you look at your indices, and they ain't looking pretty. If the S&Ps and the QQQ had daily buy signals, weekly buy signals, if everything looked all kinds of bullish, we're a little bit crazy to want to short Apple. But if Apple on its own looks a little bit sketchy, and then the market here kind of shapes up for another leg lower, that's where I think that moment in time comes together, where getting short Apple does offer a lot of edge. And before I let you guys go here, a quick look at the QQQ. And man, these Q-tips are pretty nasty. So the Qsters here, weekly sell signal, under the weekly 200, a daily squeeze fire is short, with a brand new daily sell signal, and you got a bunch of sell signals across your lower time frames. So that, my friends, is where we're at. If the bull skis can't trigger, it's got to be a short squeeze, right? Structure's too busted here. Yeah, structure's too busted. Put it this way, the QQQ is $13 under the hourly 200. So again, we could see a pretty big bounce here, but I don't think it changes anything. So the game plan moving forward here, short the bounces until proven wrong. The number one spot I would like to short the bounce in my mastery and the options room would be the Big Apple here. Let me see. We did put on a couple of trades here today. So for those of you in my mastery, we shorted TJ Maxx, overbought on the weekly chart, daily squeeze with negative momentum divergences. So we're looking for a flush down towards the daily 50, and then for those of you in the options room and the mastery, we put on a short today in GILD with a February expiration call credit spread. Same idea. Overbought on the weekly chart, daily squeeze with your negative momentum divergences. So a couple of ideas for you guys, a little bit of commentary on the market, but as I mentioned earlier, Merry Christmas, Happy Holidays. Make sure you do yourself and your family a favor this weekend. Detach a little bit. It's the holidays, it's Christmas. More importantly, as a trader, we're kind of winding down the year, And I think it's a pretty good time to, don't totally check out from the market, of course. We don't ever want to do that. But to some extent, try to unwind a little bit and put the pen to the paper. Start putting together your game plan for the year ahead. What are the setups you're going to trade? What are areas of your game you're looking to improve? All the while, you put back a little bit of eggnog. But as always, guys, I appreciate you watching. Hope you found this helpful. And for those of you in the options room, I will see you tomorrow morning at the open. Until next time, guys, adios.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.